In this presentation, we will discuss the different types of bonds with regards to governmental accounting. We're not going to go into a lot of detail about the different types of bonds, but we want to have an idea of the different kind of bonds, the different types of bonds that are available and what their differences are. First, we have the term bonds. Term bonds mature in their entirety on a given date. This can be contrasted to serial bonds that mature in installments. So the term bonds, we're going to have the bond, they're going to mature at the end of the bond, that will be it. And therefore, term bonds, fairly straightforward, fairly easy to think about. We can compare and contrast them to the serial bonds, which are going to be a bit more complex, and we can break the serial bonds into different kind of components, different kind of categories for serial bonds. We have the regular serial bonds. Those total principals of an issue is repayable in a specified number of equal annual installments over the life. So we have basically the equal annual installments when we're talking about a regular type of serial bond. Then we have the deferred serial bonds. The first installment is delayed for a period of more than a year after the date of the issue, but the subsequent installments are due on the regular basis. So the first payment, a little bit different, but then we get back to basically regularness after that point in time. Then we have the annuity serial bonds. The amount of annual principal repayments is to increase each year by approximately the same amount that the interest payment decrease, so that the total debt service remains about level over the term. Now, this sounds complicated, but if you think about the annuity table, it kind of makes sense. When you think about the annuity table for the payment of the bonds, you'll recall that usually we keep the fixed amount for the amount of payment. So we have the payment that the thing is going to be fixed, and then we vary the amount that's going to be allocated to the interest and the principal for it. Well, in this case, we're basically varying instead of the amount of allocation between interest and principal, because basically the amount of interest that will be due for each payment will change given the fact that the principal changes. We're going to basically even that out instead of changing the allocation between interest and principal, changing the amount of the payments instead. And then we have the final grouping of irregular serial bonds, and those are ones that the pattern of repayment that does not fit any of the ones listed. So we have these listed, the regular, the deferred serial bonds, the annuity serial bonds, and if they don't fit that pattern, we have some other kind of strange pattern that we put together, we're going to call those irregular serial bonds.